Welcome to Annuity News Now. A number of changes in the economy, the regulatory environment, equity markets, and consumer preferences have combined to once again drive growth in the indexed annuity business. That according to new research from Conning Research and Consulting. And my guest is Scott Hawkins. He is Vice President of Research and Consulting at Conning. Scott, it's a great pleasure. Thanks for joining us.
My pleasure, Scott.
All right, so, some of the obvious things in the economy right now, we have low interest rate environment, we have volatility. That seems to bode well for annuities in general. What does it say about the indexed products?
Yeah, my study, which we just published, really takes a look at those changes in the external environment that we think are favorable to the potential growth for the indexed annuity. The low interest rate environment is clearly one. People who are more conservative investors are looking around for the best way to generate a good return on their assets. At the same time, continued equity market volatility certainly is worrisome to those conservative investors. They're looking for some way to get a better return, but at the same time not run a great deal of risk with their accumulated assets. We think when they look around, that makes variable annuities a little less attractive and fixed annuities certainly less attractive. So that's a big factor in the changing environment that favors potential growth. The study goes on to say that when you add to that, from the consumer perspective, the sort of stabilization around the regulation of index annuities, with Dodd-Frank doing away with Rule 151A, for example, sort of stabilizing, distributors feel a little bit better about moving forward with the product. That's very favorable for the market as well. At the same time, you're starting to see insurers look around and figure out how they can obtain some growth in the growing number of baby boomers who are approaching retirement. Variable annuities continue to be popular, but for companies that don't have a VA business looking to get into the annuity line, index annuities might be popular as well. Again, several factors coming together to favor the growth of this product.
Okay, and again, just to clarify, a fixed index product, for example, would have some exposure to the market, which would give you a potential upside, but there is no downside. Is that correct?
That's correct. The insurer guarantees that your assets will not go down, and you'll be able to participate in the index that you selected.
Talk about the regulatory environment. There was sort of an upheaval there last year on these products, but things have calmed down. What do you see happening in the future?
Well, the couple of things. There has been a large, what I referred to in the study as a stabilization of the regulatory environment, which is not to say that all the issues have gone away. There's ongoing concerns about the suitability of sales, the NAIC suitability model laws in effect. Insurers are having to respond to that. Same time, the SEC continues to issue warnings that if you're a broker and you're advising the liquidation of a security to purchase an index annuity or another product, you have to be aware about suitability in that situation. Nevertheless, with doing away with 151, Rule 151, the insurers can feel better about approaching distributors, and distributors can feel better about selling the product.
Mm-hmm. And annuities in general have gotten a favorable nod from things like the GAO, and it looks like
absolutely.
they are being favorably looked at by investment banks to be to add to certain portfolios to provide a certain amount of safety, and I guess that's probably a result of demand, right?
On whose part? The safety from the investment banks,
consumer,
or from the consumers?
and both.
Yeah. No, I mean, again, it goes back to what I was talking about a few minutes ago. In this environment where markets are going up and down by hundreds of points with an all-too-often frequency, consumers are rightly concerned about, how much am I going to get out of my assets when I need to liquidate them or start drawing down from them. And that's another thing, by the way, which I found interesting when I started looking at this product, is the growing use of guaranteed living withdrawal benefits as a attractive feature, which certainly gives the consumer greater flexibility in withdrawing their assets when they need to, and greater control over that. That's a very attractive feature that's come over from the VAs, and again, I think speaks well for the index annuity going forward.
Do you see these products really, in closing, changing in the near future? Adapting to certain market conditions? Can they make changes within them to make them, for example, simpler and a little more transparent?
Well, that's one of the actual issues I do talk about. I talk about product challenges going forward. Is that you're seeing the GLWBs come in, the products becoming more complex with the benefits. You're seeing products adding more blended indexes. You're seeing products adding a wider variety of indexes, which can increase the difficulty or confusion among consumers and distributors about which index to select. Again, the other big issue with this product from a product design perspective for the consumer is getting both the consumer and distributor to really understand how their crediting rates work, how they're getting credited, and on what percentage of the index return they're being credited. Those are issues that both distributors and insurers could probably do a little bit better job in improving communication with potential consumers. So I would expect, especially with the suitability model law coming into effect, both groups working to improve that communication.
All right, well, it's good to talk to you. Scott, talk a little bit about conning research. What is it exactly that you do over there?
Sure. At a high level, conning is, depending upon the day or the end of the quarter, the third or fourth largest independent asset manager of fixed income securities for insurance companies. We have been that for several decades. So the insurance industry is our main client, and for about 4 or 5 decades, as a service to those clients, we've been doing strategic research at issues that affect insurers, both property and casualty and life. So that's where Conning's research and capabilities come from. I've been with the company since 2006, looking at the broad retirement market, VAs mostly, as well as some pension business. But what we do is try to help our insurance customers better understand changes in the marketplace that might affect their business down the road.
My guest has been Scott Hawkins. He is Vice President of Insurance Research Consulting at Conning Research. Scott, it is a great pleasure. Thank you so much.
My pleasure talking to you, Scott.
And you're watching Annuity News Now.